Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody, good morning. Welcome back to another live stream. I hope you're doing well. Hope you're staying safe out there in these crazy markets. We got Tesla down 6.5% this morning, but stock market itself is actually up, rebounding a little bit here. Let's take a look at everything from a top-down view, as we typically do in these streams. For my U.S. friends out there, I hope you enjoyed the Independence Day, 4th of July. I had a great time this and Thursday, Friday as well. My family and I, we went up to Maine to spend some time with relatives, and it was a lot of fun. I got a little bit of sun. You might be able to see it. I don't know, but I got a little bit of sun. We spent a lot of time on the coast. We had some lobster, did some cooking out, sat by the fire. Just, some classic American things, shot some fireworks, American flags everywhere. So it's a good time. And anyways, we're back here. It's good to be back as well. I missed the stream as always. So I was out for 2 days, and we're back. Since I've been gone, stock market has continued to push higher, which is always nice. It's a nice feeling when stocks continue to push higher while you're on vacation. It's a nice feeling. Indices are up today. S&P up 0.3%, NASDAQ up 0.2%, Dow Jones up 0.4%. Of course, we had on Friday the futures market traded lower, even though the stock market was closed. Russell's also holding up there, still trugging along. I have my stop loss trailed on this one. I am looking for some higher lows on the Russell in order to continue to trail this trade further. So specifically what I'm looking for on this would be, we've taken out these highs. Trade management for me here is just to do nothing unless we put in some sort of higher low. So for example, if we were to get, and I'll show you guys a quick trick. This is kind of a fun way. If you're trailing stops, and believe me when I say the best feeling in the world is when I'm in trailing stop mode. It's a whole lot better than stopping out and losing streaks and such like that. Right now, I'm in the mode where I have a trade running really well, and I'm just managing the position. My primary occupation right now as a trader, my primary job is to simply trail this stop loss. It is my biggest position. It is a big winner in my account right now. My job is to show up each day and say, should I trail further? Should I trail further? Should I trail further? Did you wear sunscreen? I did. But it was strong out there. And just quick trip summary. One of the coolest things that we do in Maine is we go get fresh clams off the beach. And specifically, there's an island, right? So if my family's, my aunt and uncle's place is on the mainland, right? It's on a peninsula, actually. Their house is here, right? And there's an island over here. And they have a little dock, right? And you actually have to kayak over to this other island. And on the beach, there's lots of clams. So we go out there with our shovels and our pitchforks and our rakes, and we rake them out of the water, out of the sand. And we put them in a big bucket, and then we bring them home. And then we boiled them, and it was delicious. So the issue is I brought sunscreen, but I didn't wear enough. And my wife is more fair skinned than me, and she got a little bit more burnt than I did. Can you explain a little bit about your strategy? I'm new. Absolutely. Poor clams. You know, we also did lobster. And here's the thing about this. This is totally off the rails, and I'll keep it really brief. With lobsters, boiling them alive seems kind of like a, inhumane thing. So we did the humane thing, and we took care of them before boiling them, if you will. I felt better about that. Anyways, taking a look here at the Russell, what's my trading strategy? Well, I'm primarily using 3 components to everything I do: fundamental analysis, technical analysis, and sentiment analysis. My guess is 95+% of people watching this stream right now know a whole bunch about technical analysis. It's all over YouTube. It's the most popular strategy by retail traders, is to obsess over candlestick patterns, liquidity grabs, simple moving averages. That's what everybody kind of learns. That's their training wheels, right? What is far less popular in the retail trading space is fundamental analysis. And what's kind of in the middle, like some retail traders like it, some others don't know about it, is sentiment analysis. This is the hardest. This is the second most difficult. This is the easiest. That's why retail typically loves technical analysis. It's very easy to pick up. You could learn, like the first week I started trading, I understood a good bit about technical analysis. Like, it's not hard. Technical analysis is very straightforward. It's very simple, right? The concept of this area of support, this is where buyers stepped in and pushed price off of it. I get that. This is a recent high. Sellers were strong there, right? Anybody can do that. Like an 8-year-old can figure that out, right? So that's why I think retail traders struggle, is they obsess over the things that are easy, and they're afraid of, they move away from things that are harder. But honestly, in my view, much more rewarding is understanding fundamental analysis. Once you get it, once you understand that that's the wind in the sail, like if we're all, picture your trading journey as you on a boat. Imagine trying to sail without knowing which way the wind is going. Fundamental analysis and sentiment analysis help to actually guide the ship. Technical analysis is just, for me, it's just a time to get in and where to stop out. That's all technical analysis is, right? But if you give the direction wrong, it doesn't matter. Like, technicals to me, completely useless if I didn't have fundamental analysis to help guide the direction, right? So my trade with the Russell, how did I enter this trade? Well, at the time, it no longer is, but the Russell was getting a strong reading on the EdgeFinder. Now, what does that mean? Why should you care if the EdgeFinder gave it a strong score? Well, the EdgeFinder is nothing magic. It is just a sourcing tool, right? So I just got done explaining the importance of fundamental analysis and sentiment analysis. But you might say, okay, that's great, but what the heck does that even mean? And how can I use fundamentals and sentiment? Well, what is fundamental analysis, first of all? Simple way of reading it. It's the economic data. It's the underlying scorecard of an economy. That's the wind in the sail for currencies, for indices, for commodities, right? If you want to talk about individual stocks, you can get into the financials. That's the wind in the sail there. But the wind in the sail, if you're trading indices, if you're trading gold, if you're trading currency pairs, is the economic data. It is the fuel that pushes the fire, or the water that gets tossed on the fire. I'm talking about things like labor statistics. Are people very heavily employed in an economy? Is there a strong labor market in an economy? How's inflation doing? Is inflation problematic? Is it good? Is it bad? What's the growth of the country, right? By looking at these factors, we say, should we be buying the dollar? Well, how are you going to determine if you should be buying the dollar? If you asked me and many other wonderful traders in this room, what we're going to tell you, hold on, let me fix my camera. There we go. What we're going to tell you is that if you're someone who's saying, should I buy the dollar? What we're going to tell you is we're going to say, let's look at the inputs to the dollar, the economy. Those are the inputs. They matter. Do we have a strong labor market? Do we have strong growth? Do we have strong outlook for the economy? How can you How on earth can you as a person at home do all that? Well, you can watch the headline news, but the problem there is you get bias and fear and all sorts of political affiliations involved. Let's abandon that and let's just look at the economic data. So we have a tool here that maps it all out and gives us scoring for each asset automatically. So we just show up and the scoring is already done, right? So then we look at things like the NASDAQ. Why is the NASDAQ getting a bullish rating? Well, we also want to consider sentiment. Are institutions buying the NASDAQ right now? That's a question we want to ask. Is retail super bullish or super bearish on the NASDAQ? Because we want to fade that, right? At least I do. Seasonally, is it a good time to buy the NASDAQ? These are real questions that help us to build an edge. It's in the name. The tool is called the EdgeFinder. It is meant to help scan more data to help build a bigger, better picture on assets that we are considering buying or selling. Does that make sense? So anyways, sorry, I just bumped my mic. Hopefully I didn't make a bunch of noise. So if you ask me, do indices move higher from here? My suggestion would be path of least resistance is yes, they should continue to push higher from here. Now, you just heard some guy on YouTube who has a YouTube channel with a bunch of subscribers and he wears a shirt with his company logo. Is this guy just full of it? Well, here's what I'll tell you. I think indices are going to move higher, but when I say that, I'm not saying with 90% accuracy indices are going to move. That's not what I'm saying at all. I'm saying like 55% likelihood, I think the indices will move higher. But I can make money with this, right? I'm not going to be right every time. I'm going to be wrong often with a 55% accuracy. But this is all I need. And I don't need to sell you the dream. I don't need to convince you I'm some sort of superhero trader. I can just trade. If I can get a 55% probability of correctness, I can make boatloads of money over the years doing this. I'm not going to make a bajillion dollars overnight, but with the EdgeFinder, I've been able to produce a very consistently profitable approach in the markets, combining it with my technical analysis, my risk management strategy. So I'm not blowing smoke. I have a, you can go check my channel if you'd like to go to the homepage of my YouTube channel. You can view and read, or you can see my live track record, my brokerage account logged in directly on camera. I'm logged into it right now. Like, I'm not here BSing, right? I really have reached a profitability standpoint in my trading through the help of the right tools, the right approach, and the slow and steady method that we preach day in, day out on this YouTube channel. So I'm not here to sell you a dream, but this tool has helped me tremendously to take it to the next level, to scan more data quickly. We live in an era where more data is better, right? Understanding that the institutions out there are heavily trading with data, and the average retail trader is staring at a 20-period moving average or a simple moving average or a simple support and resistance strategy, or trend lines, or fair value gaps, and they're wondering, why the heck am I losing money like crazy? I would suggest that maybe you've thought trading is easier than it actually is, and then it's not just candlestick patterns on a chart that are going to make you rich. In my view, once I actually started to respect the market truly and discovered how it actually moves, I discovered I want to be in line with the economic data, with the sentiment of the market. What are institutions doing and what is the crowd sentiment? I want to have my finger on the pulse of these things to build a better bias. So we saw it dropped in the chat here. We are currently doing a huge discount on the tool. If you would like to get access to the data tools that we've built over the last few years, the EdgeFinder is currently 45% off. It is our biggest discount price that we do all year long, is a 45% off discount. If you'd like to take advantage of that before this ends, click the link that's just been dropped in the chat to speak directly to our support team. It is 40% off, but for live stream viewers right now who click that link and send us a DM, a real person from my staff will get you hooked up with the extra 5% off. It's a one-time payment to get access. So So check it out if you haven't already. Take advantage of the discount going on right now. Let's take a look at some more markets. Take a look at gold here, down a little bit. So I do have a long position on GLD. So I'll pull this one up. Here is my, so I've given back some gains on this one here this morning, but still holding my gold long. If we do break through support, then I'm going to stop out on this one, but it will be a small controlled loss if I do. Taking a look at gold spot prices here, you can see we've got price continuing to push up overall on this upward trend line and tagging into a level of support here around 3,300 to 3,270, let's call it. So I did get long right over here, and I do think that we do have the potential to see rate cuts in 2025. So I do predominantly stay on the bullish side of gold with support now holding. So let's see if we can get a push off this area. If we can start to take out through those highs up to 34, 3,500 in this range, then I'll look to really trail a stop loss on this gold trade. But where we currently sit, I'm just going to kind of let it go. Right now, gold has been very sideways for a while. I'm not in a rush to see some big, huge move on gold, but I would need to stop out of the trade to control risk if we break through the lows of this support zone that we see around that 32.75 area. So I'm bullish on gold. I think the EdgeFinder is bullish on gold. I'm not sure. It might have dropped down to, no, went back into neutral territory. We will get, I know this is a question for some traders right now, why isn't the COT data updated? Don't worry, COT data will update, I believe today or tomorrow. Because of the US holiday, that gets pushed back a day. So we will get COT data, but it will be delayed by 1 to 2 days. So once that updates, the EdgeFinder will automatically pull it in and will update within your EdgeFinder platform. So you'll have the latest data there once it comes out. And if you have the EdgeFinder Smart Alerts, which are an alert notification system with the EdgeFinder, you can actually get notified when the COT data drops. If you don't have that yet, send us a DM on the website and just let us know you'd like access to the EdgeFinder Smart Alerts, and we'll get you one of those. What happened with the NZD pairs? Let's look. What is going on with NZD USD here? Look at that, New Zealand. What happened here? Let's go take a look. Is it NZD USD specifically? Australian dollar against the Kiwi dollar moving higher here today. I mean, dollar's strong this morning. You got dollar up 0.4%. Euro dollar's lower, pound dollar's lower. Kiwi dollar taking the biggest hit though, seems like. Down 1%. Let's take a look at some other NZD pairs. Yeah, look at NZD CAD. So it does seem like a New Zealand dollar move. I'm not sure. Did they cut rates? I think they might have. No, they have. I know they have like the RBNZ rate statement, but that's Tuesday. So not sure. Something happened. Something news related. Because that's a pretty big move lower for NZD. Oil prices are up today 1.6%. Nick, my trading has completely changed after learning about the world of options and especially the Greeks. Options greatly improve your vision. Bulent, the options market, is one of my favorites and most telling markets in my view. The bond market and the options market, in my view, like a lot of Forex traders, a lot of futures traders, people who like indices and commodities would greatly benefit. They have no idea, but they would greatly benefit from diving in and understanding the world of options, the VIX, and the bond market, the 10-year yield. If you actually understand what the bond market is telling you. Now, I don't do it very much on my channel. You know why I don't do it on my channel? Because I've looked at the analytics. People don't really care when I talk about bonds, even though it's one of the most important markets. And I do at the end of the day This is a business. I'm trying to keep this content as engaging as possible to the max number of people that I can. And so I do typically stick with the markets that people really care to hear about. So I'll continue to cover euro dollar and gold and the NASDAQ. But just know that if you really want to take your trading to the next level, I think everyone should know how options function. Even if you don't end up trading them, you should understand, you should take time to go learn the options market, how it trades, how it functions, how volatility plays such a key role in markets, and most people completely ignore it. Speaking of volatility, here's the VIX, 17.7 here today. Still very low VIX relative to recent history when we had all of the tariff trauma. You had to move up to 60 on the VIX. Crazy push higher here. Volatility has since really squeezed lower. The DAX is moving really nicely today. I may actually get a chance if we can take out these highs on the DAX. I'm going to look to trail my stop loss. I have a position on the ETF DAX. Take a look at DAX. Well, where is my DAX position? There it is. I have a position on the DAX. It's up $552. Would love to see, like I said, German 40. I'd love to see this break out. And if it does, I'll get a chance to actually trail stops further in. So I've got this level here. If we can take out this level, if we can break through that range, I'm going to take this stop loss and move it in. What's up, Jason? Good to see you. If stocks generally go up over the long term, why wouldn't you just buy a XXX leverage ETF like TQQQ? Wouldn't that give you a higher return, around 24% per year instead of 8%? Web trades, not only is that a strange question, but it's a great question. I've had that question and that conversation like 10 dozen times. And sometimes I even have to remind myself why it doesn't work. I'll tell you why it doesn't work. Because this world, there's nothing for free. So when you go and you take a long position on TQQQ, right? This is a triple leveraged. What does leverage mean? Borrowing money. It is essentially like if you were to go borrow money. Picture this, Jason. If you were to go borrow money from the bank and just invested it in the S&P 500, like let's say you're like, well, I want to make more money from the indices going up. So instead of trading with my $10,000, I'm going to go to the bank and I'm going to borrow another $30,000 from the bank, right? Sounds great if the market goes up. But the problem is you just borrowed the bank's money. Now, when you use a TQQQ or a leveraged ETF, or if you're trading CFDs, which most viewers in this audience, because I know, maybe 30, 40% of my audience is in the US, everyone else is trading CFDs. If they want to trade gold, XAU USD, NAS 100, those are CFDs. They're leveraged products. Why do you have overnight cost to holding CFDs? Because they're leveraged. Leverage just means borrowing money. That means if you're trading CFDs, you're borrowing money. If you're trading triple leveraged, you're borrowing money. So what happens if you borrow a whole bunch of money, right, from the bank, and it goes up, the market goes up, then instead of trading $10,000, you're going to feel like a genius because you just tripled the returns by borrowing the bank's money and saying, ha, bank's an idiot because they could have just put their own money in the S&P 500 and made, the percentage. But you're borrowing money. What does borrowing money entail? You have to pay interest. So when you are paying interest every single month, that stacks up over time. And so what happens if you're paying a considerable amount of interest over time and the market goes down for 5 to 10 years, you're going to get destroyed. Because not only are you going to experience triple the loss if it goes down, right? It's easy to look at the market in the last 20 years and say, these things are easy. They just go up. But what about, go do some homework on this for anybody who's like, and I'm not singling out Jason by any means. I'm singling out everyone to think about this. If you think indices just go up forever, go look at Japan in 1980s. Look at their stock market. It was the hottest in the world. Japan looked like it was going to take over the world. Look at the US from 2008 to 2000 and, go to like 1999 to like 2010. 10 plus years and your money went sideways. If you had borrowed money and triple X leveraged before that, guess what? You would have paid a fortune to the bank, and you probably would have blown up along the way because you've triple X leveraged. It works when the market's going up. TQQQ, you look like a genius when you leverage the NAS 100 CFD or you buy TQQQ. You do something with leverage, you buy calls. All of that looks like brilliance when the markets are going up. But it will destroy you if the market enters into a true, you'll lose everything. If you lever up into a long bear market, which we haven't seen in a long time, but I think they will come. I don't try and time when those things are going to happen. If you watch my channel, I just lean bullish most of the time. And very rarely. I was bearish going into the beginning of 2025. Not because I disliked Trump or anything, but because the market's perception of the market was so bullish. We were so euphoric going into the Trump administration that it made me considerably cautious. And it ultimately served me very, very well this year. That caution served me very, very well because I was able to buy the dip. I was very cash heavy and I started buying the dip here. I was too early, but still it was better than, what was that? That was 8%. I saved myself an 8% drawdown piece by itself minimum because I typically will use, more tech stocks, which drop much harder and rally much higher in good times. So I know that was a long answer, but that is the trap of the indices is people think that when they've gone up that they're just going to go up forever. But if you use leverage, triple X that number, 27%, and you're looking at a world of pain, right? Now, if you want to use those TQQQs or call options, my opinion is there is a time and a place for a very small amount of leverage. And it's down here. It's not up here. It's my personal opinion. You do what you want. What if we like pain? Then you're doing the right thing. Trading is the right place. If you want some pain and if you want to be insane, just go to the gym and trade. And then you're always in pain, right? If you're trying to get big and also try and make gains in the market, man, you're ready for a world of pain. I say that as if I haven't been to the gym in a couple of days. I'm really looking forward to working out again. I've been, on vacation. Anyways, indices just opened up. You had stock market. So I'm speaking of a world of pain. Tesla down 7%, my biggest stock position. So today I'm sitting in a little bit of drawdown. We're not really the position's still doing great, but it was looking a whole lot greater before it lost 20% of its value. This is Tesla. It's a very, very volatile stock. We'll see. IWM is a position that here's my biggest position currently is the Russell 2000 index. I am still trailing a stop loss on this one, looking for a higher low here today if we can get it. I do have a small position on gold, watching oil. In terms of top setups currently, let's take a look. Yeah, Tesla, the good thing about Tesla is I shorted some calls last week. So to hedge myself a little bit, I sold fresh 375 calls on Tesla. If you're not an options person, no worries. Essentially, I have a kind of bearish bet that Tesla will stay below 375 by August 1st. And with the price dropping here, what I could choose to do today is if Tesla continues to fall more than 7%, what I may choose to do is actually close that position for a win. So we'll see. Anyways, dollar index up slightly here today. Dollar index has been such a bear here for a while. I'm going to just take a look at some of our top setups here today on the EdgeFinder, looking at Euro CAD, Euro dollar. Let's just go through the list. We've got a minute here to do this. Let's do it. Let's go through our list of stuff on the EdgeFinder currently, starting with Euro CAD. Euro CAD. Now, typically when I trade currencies, I look less at the momentum factor and more at the economic data. Typically, if I'm looking at currencies, I do prefer to look at the top setups eco tab, but for the sake of simplicity, we'll just go through the list here. Euro CAD, Euro dollar, both getting bullish reads. This one for EuroCAD looks really strong. You've had a breakout of resistance here. So if I'm watching EuroCAD, I'd be looking for a retest into this area here. Euro dollar, let's take a look here. Euro dollar looks phenomenal, really strong upward trend. At the very least, I would need a pullback to like 1.16, but really would prefer something like a pushback down to 1.1440, let's call it, for possible long side continuation. So I do like the idea of getting long the euro dollar at these levels, 113, 114, maybe 116, could potentially build a position there if it gives me that setup. So let's see what else. DAX. I'm already long the DAX. This is an ongoing position for me. I'm long the German 40. Well, actually, specifically, I'm long the DAX, which is an ETF. You can see I've got 500 shares of DAX, up $537 on this trade currently. I had a question, and I'm not going to try and answer on here because it took me way too long, or it would take me too long to try and go through that. The German 40 CFD and the DAX ETF, why do they look slightly different? Long story short, you should search that up on Grok or ChatGPT if you want to know. But there's some transaction costs involved, and the price movements are not perfectly synced. But generally, the correlation is very high. So I actually trade. I can't trade German 40 as a U.S. citizen. I can't trade German 40 on a regulated brokerage, as CFDs are illegal to U.S. traders. So I trade the ETF variation DAX. You could also trade it on the futures market, just personal preference. Let's move on to Euro Aussie. Euro Aussie. Let's take a look at this pair. So if I pull this one up, trending beautifully. I mean, this chart looks great. Looks very, very strong. The Australian dollar looks pretty soft. Bare minimum pullback would be into this 1.79 level. Where I'd like it more would be something like this, something like this. Pair looks really good. Would be interested in buying dips on Euro Aussie at this time. Let's continue taking a look at NASDAQ. NASDAQ getting a very strong reading on the EdgeFinder. Would be looking for pullbacks at the very least to this 22,100 level. The past all-time high. If that were to get retested, that would probably be a bullish setup for me. Euro pound, taking a look at Euro pound. I have a short position on this one, and somebody called me out. They say, why are you short Euro pound when the EdgeFinder is bullish? It's a great question. However, this is the top setups page considering COT data, trend, seasonality, retail positioning. When it comes to currencies, I'm much more long-term, and I prefer to only focus on the economic data. So when looking at the economic data, it's not so bullish when only looking at the economic data. But that is typically where, when it comes to the top setups indicator, this is where you can kind of select what is more right to your trading style. This is why we've built this, is because some traders prefer an economic data focus in their scoring. Some people prefer everything, like the main top setups thing. Other people prefer to only look at sentiment, commitment of traders data, retail positioning. Totally valid to use whatever fits your trading style best. If you're a scalper, you may not really care about the top setups page. Maybe you're just looking at top setup sentiment. If you're a day trader, maybe you're looking at that. If you're a longer term position trader like me with Forex, I may look at the top setups eco page. If I'm looking at momentum trading setups on gold and indices, I'm probably looking at the top setups, right? So each person, each different style, scalpers, day traders, swing traders, can all use the EdgeFinder and sort of suit it to their own needs. The EdgeFinder is not an out-of-the-box money-making, machine. I wish that existed. It does not. Trading is hard. But it is a tool that can be customized to fit your style of trading, and that is why we've done these different top setups pages. By the way, quick plug, EdgeFinder 45% off sale is going on right now. It is a great time. If you've thought about getting the EdgeFinder in the last, few months or whatever, if you've been watching the streams for a little while and you're like, that thing's pretty cool, it's yours today for one of the lowest prices that we do. Well, the lowest price that we do all year long. 45% off sale is happening right now. Send us a direct message using this link that just got dropped in the live stream chat. If you're watching this back at a later time, you can just go to a1trading.com and chat with us in the bottom right hand of the screen, or click on the page that says like promotions on the home page, and you can find out some information about the current sale that we're running. Don't miss it. It is a huge discount offer that we're doing right now. Continuing on, Swiss yen. Let's take a look at Swiss yen. CHF JPY. Swiss yen. Oh my gosh, this thing is a monster. Swiss yen hitting all-time highs here today. And there's no buying I can do here. If you're in this trade, if you're trailing stops or taking partial profits or however, if you are in Swiss yen, it's hard to mess this one up if you're long. This has been a phenomenal uptrend. Swiss franc has been so strong here recently. And is this is Swiss franc strength across the board, it seems like. No, not quite. Maybe this is yen weakness. Is yen weakness today. Yep. Yen pairs mostly weaker today. Very interesting. Swiss yen bullish for me, would have to see a pullback. I can't justify getting long unless it was like a 61.8% retracement. So beautiful uptrend. Congrats if you're in it, but not one that I can touch. Euro yen, going to be the same thing. Euro yen's been dominant here recently. Look at that beautiful currency move. Just one directional upside. Can't touch it though, too stretched. China 50, let's take a look at HK 50 here, the CFD just for reference here. Let's take a look at this one really quick. Back towards those all-time highs for me on Chinese stocks. I'd be an interested buyer, but would need to see a pullback further. So watching that close, maybe 22,900 or so would probably be an area I'm interested in. Look at pound Swiss. OT, I'm just looking through the EdgeFinder's top setups at this time. So I'm going to stick to what is a setup within my strategy. Nikkei is up next. Let's take a look at it. Nikkei, where are you? There you are. Back to all-time highs, just sitting just below this. This is actually a really interesting, I'm sorry, this is not all-time highs. This is all-time highs right here. Pretty close to it, but not quite there. So if I'm looking at, the Japanese stock market, the Japanese stock market here with yen weakness today, to me looks like it could potentially be poised for a breakout. If you get something like this, a breakout and retest, you have a series of higher lows and higher highs in this market. It looks very strong. I think we could be headed to fresh highs on the Nikkei. Looks strong. Especially if the US and Japan kind of reach a deal, that could be a catalyst for the Japanese stock market. Speaking of stock markets, let's take a look at the Dow Jones, another bullish setup on the EdgeFinder currently, back to its all-time highs. You got one of two scenarios I see here with the Dow Jones, either a break and retest through these highs and onwards, or a retest to this 43,000 mark. Both of those levels, I'd be interested in being a buyer. So still bullish on Dow Jones. Looks amazing. This has been quite the recovery here for major U.S. stock markets. Finally, the S&P 500 is our last bullish setup. Very straightforward. A retest of this 6,100 would be an area where I'd be a buyer of the S&P 500 within accordance to the EdgeFinder and my strategy. Right? So we'll see. A lot of stuff setting up, just waiting for pullbacks on some things and trailing stops on my existing positions in gold and the Russell. Moving on, let's take a look at some bearish stuff. We got dollar ZAR, USD ZAR. Interesting to see this one getting a bearish reading, but trending lower here. And what's nice about dollar ZAR is being short on this one, you get a nice positive carry, and the trend is to the downside right now. So this is an interesting one. The only thing you got to be careful with USD ZAR, the swaps, if you're on the long side, can be very costly, and the spreads can be very spready. This is not a cheap thing to trade. It is very pretty expensive, actually. However, if you did get a pop up into resistance with positive swap and a downtrend, I do think the South African rand versus the dollar, I think that this could continue to push lower here, this pair. CAD Swiss, also another one that I am long, even though it has a bearish setup on the EdgeFinder. Technicals do look very bearish for now. So this is a weird thing to think, but because I'm dollar cost averaging, I actually wouldn't mind if it continues to push lower and think that in the short term, it may continue to push lower. I have long positions on the CAD Swiss around here and around here, I want to call it. And would be willing to add a little bit more to my long position. This is a longer term play. I'm not really focused too much on the short term technicals. So if we do get a push lower, which I think we could, it may give me a chance to pick up some more CAD Swiss at a better price. It is contrarian. It is not for everyone, but it's a style that I've traded with for a very long time on currencies and prefer to do it that way. Anyways, short term does look still bearish, especially if you can get a more decisive breakout through these lows. You're kind of retesting previous support here, which may now turn as resistance. And this is an all-time low for the CAD Swiss. Pushing on, dollar yen. Bearish setups here on the EdgeFinder for dollar yen as it retraces higher. Very interesting to see that combination. So if you do get a push up to the top of this range, to me, this would be an area where I'm a little bit more bearish on the dollar yen, right? Would favor a downside move from those levels if we saw it. Cautionary tale here with dollar yen. Very costly to hold shorts on dollar yen. Positive swap does not apply to dollar yen. In fact, it's the opposite. If you're long dollar yen, you get a nice positive swap. If you're short dollar yen, it's a very expensive trade to hold. Aussie Swiss, another expensive one to hold. And the next couple ones are going to be expensive shorts. CAD Swiss, Aussie Swiss, these things are costly to hold short, but the market is still trending lower. So if you're very determined to be bearish on these pairs, right, there may be some further downsides you could take advantage of. For me, it would have to be on a pop. Pound Swiss and dollar Swiss, GBP CHF. Let's take a look at those pairs. You've got downtrend on, got a pretty decisive downtrend here on the pound against the Swiss franc. I see resistance here around the 1.095 level or so. Probably not a trade that I would take. I typically do prefer to stay on the positive side of carry when I can, meaning that your swaps are positive numbers, not negative ones that are very expensive, especially over time. If you hold a short position on like dollar Swiss, it's a very costly trade. Now, if you were holding it during this time, yeah, you're paying swaps, but you're making way more on the gains from the short position, right? So keep that in mind. But you have to be right on direction if you're going to carry, if you're going to essentially hold the negative carry for a suspended time. To me, I'd be more interested actually if the dollar were to turn stronger. Dollar Swiss would be a candidate for longs, but not at these levels right now. I just don't see I don't have the bullishness that I like the CAD, but I don't really like the dollar right now. Speaking of currencies for a second, let's just take a look at our economic surprise meter for a second. Just get an idea here. Swiss franc is actually coming in strong right now. Euro strong. Pound weak. Dollar mixed. NZD strong. Aussie weak. Japanese yen mixed. CAD weak at this time. So I'm going to keep an eye on this. I may need to start adjusting some of my existing positions, or if, like, for example, if the Canadian dollar is something that I'm no longer bullish on, what do? Do I just close out everything? Well, my position sizing is so tiny that what I could do is I could wait for a rally in the CAD and then look to close out on that. Trader Anthony, nice question. I just did if you want to rewind just a little bit, I just went through the full list of top setups on the EdgeFinder and discussed both the S&P 500, the Dow, and NASDAQ. Just rewind the stream a little bit if you want to hear more about the S&P. I just did that one, but basically looking for like a pullback to 6,100, and of course keeping an eye on the EdgeFinder's confirmation to make sure that it's still a trade that I want to take. Just a quick reminder, like I said earlier, the EdgeFinder 45% off sale is going on right now. It is ending soon, and it is our biggest discount price that we offer all year long, that 45% off discount. If you have questions, if you want to know more about the tool, if you want to explore it for yourself, head over to our website, a1trading.com, or click the link in the chat right now to where you can speak directly to our support team if you have any questions. And last thing I'll say about this, I'm sorry if you've stuck with all of our ads here today, but we're doing a huge sale right now. And the last thing I'll say about it is if you're somebody who's in a place where the dollar is very expensive, we've had some people who are like, Nick, I love the EdgeFinder, but I just can't do it. The price is too expensive in my country. We get that and we respect that. Some places the dollar is very expensive and we are aware of that. The EdgeFinder is priced obviously for predominantly for our biggest customer base, which is going to be US, Canada, UK, etc. But if you're from a place and you're like, I still want the EdgeFinder, I simply can't get to that number, we hear you, and we do make exceptions on our pricing for people in places where the dollar is very expensive. So If that is you, if you're like, wait, so you guys consider countries that have weaker currencies to the dollar? Yes, we do. We're currency traders over here. Of course we do. We do consider making exceptions for certain countries where we can get you lower prices on the tool. If that is something that you are interested in, we'll drop that link one more time. I know I keep telling the producers to drop the chat link. If you chat with our support team, we will do our very best to find a price or a payment plan option that works better for you to break up the cost into monthly payments or just a lower price based on where you are. So send us a direct message right here. Click this link, send us a direct message, and let us know that you were just watching the stream and that you heard about our inclusive pricing offers that we do. This makes it so that you, from a place where the US dollar is very expensive, we still want your business. We still want you to use our tools. We appreciate the subscribers and viewers from different places and are trying to make our pricing flexible to places where the dollar is very expensive. So to find out information about that, like I said, click that link, chat with our support team. So there you go. I'm poor. Can I get a 99% discount? Badgie, if you're poor, why are you trading? Trading is not a very smart thing if you don't have any capital. In fact, I wish it was not that way, but that is a reality of trading that I certainly did not want to hear when I first got started trading. I did not want to hear that it was going to be difficult to grow a small account into a big one when I first got started trading. But over time, I embraced the long game. Over time, I embraced the idea that, look, I went to school for software engineering. I can get promotions in my career. I can save money by not spending it on stupid things. I can get a side hustle. I used to buy and sell farm and garden equipment like tractors and ATVs and four-wheelers. And there was one summer when I was 19 years old, I think I made somewhere in the neighborhood of like $15,000 buying and selling in one summer. This is after high school, right? $15,000, somewhere in that range. That was just from buying and selling equipment. I was also cutting grass all summer long. I mean, I worked my butt off, but it was because I was like, I don't have money to trade, but I want to trade and I want to have capital to trade. And so that really kicked off my trading journey, was buying and selling equipment, cutting grass all summer long, and getting as much business as I could. That was my foundation to my trading journey, was realizing, okay, I need capital to make money in trading, and not making any more excuses and going out and getting it, right? Just knocking down doors, knocking on people's doors. Hey, can I cut your grass? Can I, clear your woods behind your house? And it was another project that I did for one neighbor. Had this big riverside lot, but you couldn't see the river. And I knocked on their door and I just said, hey, I took one of the tractors that I had bought to flip, and it had a backhoe on it. And a backhoe is like the thing that, it's like the thing that you can pull up dirt out of the ground with it. So anyways, I went to that neighbor and I said, you've got a bunch of stumps in your yard and you've got a clearing, or you've got a riverside lot, but you can't see the river. Can I clear that for you and get rid of all those stumps? And I used one of the tractors that I was flipping to go do that gig and made another $2,000 just doing that. The long story short is, if you want to be a trader, it's a hustle. It's a hustle that goes well beyond just looking at charts. And then ultimately I started A1 Trading, which, is sort of my day job, if you will, and I still trade. And to be honest, I don't actually ever really want to do nothing but trading. I always kind of want to do something, even if it's not YouTube and software, which, to me, I'm not going anywhere. Don't worry. I love doing this. But even if it was like, I still think I would be like mentoring or doing something to keep myself from just staring at charts all day long. Like I don't ever want to be just staring at technical charts day in, day out for my job. I do that right now, but most of my day is content creation and working with traders in the Discord and helping the team here behind the scenes, working on the software products. It keeps me busy on other creative things, and I like it that way. I think we were supposed to have Ivan. Did he dip out on us? Let me just double check. By the way, if you're an A1 trading stream pro, you can always go to our website, A1 Trading, click the A1 live stream if you want to see our schedule. Yeah, we're supposed to have Ivan tune in, but he must have bailed on us. We have Chris Pulver at 10:15, so we got a minute. If you guys have questions for me, maybe we'll do some questions. We haven't done questions in a minute, and I have missed doing them. If you guys have questions for the stream right now, maybe we can drop the link in the chat for that. If you have something specific that you're wondering about in trading, something that I can help answer maybe, click this link. It's being dropped. Submit your question to the stream, and in a few minutes, I will review it. First come, first serve. I'll try and get through as many as I can before our next show segment starts. Look at that. DAX is ripping here. Look at that, guys. Very nice. How's my Tesla doing? Come on, Tesla. Down 8% today. Painful. Painful. We're still doing well in this stock, but definitely been a rough ride here recently. Stock's been back and forth, jumping up, jumping back down. What I may do though today is I may actually close that call that I sold. In fact, let me just look at what I'm getting on that real quick. Pull up my Tesla position here. You can see even though the indices are up today, Tesla's killing me. So putting me in the red today by 1% on the portfolio. So yeah, so you can see these calls that I sold. The one perk is that I sold calls like on Thursday. Was the market open Thursday? Yeah, Thursday morning I sold calls on Tesla. And so on those calls, I'm up 63% or $750 on those calls. So what I could do is if Tesla keeps selling down today, what I can do is these are 375 calls. So I shorted calls, right? Essentially, this is the bet that I made. By shorting calls, I said, I don't think the price of Tesla will be at or above 375 by August 1st, the expiration date. So I sold a bet to someone else. Someone else out there, rest in peace to them right now, they bought calls saying that by August 1st, Tesla would be at least at 375. So obviously with today's push lower in the stock price, right, those calls that I shorted have lost a lot of value. Now, when you short something, obviously you want it to lose value, right? So, yeah. So when it comes to Tesla, what I may choose to do, I need to update this because I did actually, so I had the July 11th calls. I closed those and then I reopened a new short position August 2025. So I'm in the red today, but it has been a very, very good year. 2025 has been a very good trading year for me. But you're going to have red days, you're going to have green days. Anyways, what I think I'm going to do with this is I'm going to watch, if I can get like 75% of this, I mean 75% in like 2 days on these calls, I'd probably just take that. In fact, you're coming into support here. I may just go ahead and take the profits on this. If you submitted a question, I'm going to take a look at those in just a second. I have 1, 2, 3, 4, 5, 6 questions. I'm going to just take profits on this really quick. Hold on. Let me just close. Let me make sure I'm not. Okay, close by limit order. So I'm going to give back some of the premium. So I'm going to pay back $436 for these options. So I'll collect $750 total out of this. orders, modify 220. Let's just do it. There we go. And we're out. Tesla calls sold. So I'm out of those. I'm sorry. Tesla calls bought back, technically. When you're short something and you want to close out, you have to buy it back. So I just bought back my 2 calls on Tesla. So what am I going to do here from now? Well, I've been trading Tesla for a while, so I've still got a great overall P&L on Tesla, but I thought it was a little stretched. And I also wanted to reduce my exposure. So I was actually hoping that Tesla would rip through here and then I would get called away from my 200 shares. But yeah, I'm going to take a look at those questions here now. I know Tesla's not fan favorite on the stream, but it was a trade that I wanted to make sure I just locked in those profits on it. So we'll take the profit. So that was a $750 realized profit on Tesla today. Now, of course, with the stock dropping, I lost much more than that in the stock's price today. But those calls were a nice little mini hedge, if you will. So I'll take some profits there, even though stock's down today. All right. Back to business here. Let's take a look at some of those questions here. Let me just refresh this, make sure it's all appropriate here. All right, let's do some questions. Several questions today. First question is from Jason. They've been trading for 3+ years. The primary goal right now is to improve their trading psychology. If stocks generally go up over the long term, Jason, I think we covered this. Yeah, we covered this earlier in the stream. Gotcha. You asked it earlier. Yep. So we talked about TQQQ. If you want to back up in the stream and watch that, essentially we equated it to leverage products or borrowing money. Borrowing money works great if you're right. It works terribly if you're wrong and also owe that money back. Next question is from Yang. They've been trading for 1 to 3 years. Their primary goal right now is to become a funded trader. Based on your experience with hedge funds, are they really always profitable, or are they just like other retail traders but wealthier? Hedge funds have losing years. They have losing months, just like traders. Even professional individual traders, retail traders, whatever you'd like to call them, they have down years. They have down months. Trading is just very unpredictable in terms of returns. You may be over the long term a consistently profitable trader or investor, but you're going to have down months, and you're even going to have likely down years. It happens. Imagine you just have a bad drawdown. It takes you, a year and a half to get back from that. It happens. It happened to me in 2022. I had a really tough drawdown and came out of it, but it took some time and it was no fun. Pascal's been trading for 1 to 3 years. What would you advise someone who is trying to pass prop firm challenges to find the middle between being aggressive and conservative? Yeah, that's a great question. How do you be aggressive enough that you can pass the challenge within oftentimes they have time constraints. By the way, just a quick plug, the DNA funded, which maybe we can drop a link here in the chat if anybody wants to explore DNA. We'll drop the link here in the chat to where you can find some information about them. They offer unlimited trading days. So if you're more of a swing trader or a position trader or a longer term trader, I definitely recommend looking into certain prop firms. Now, of course, we've got one that we're referring, DNA funded. If you want to check them out, we'll have that link in the chat in just a second. And we have a promo code. So you get 20% off with DNA funded. So check them out right here. First of all, if you're more of a longer term trader, I personally, I don't do funding challenges. I'm in a fortunate enough position where I have my own capital to trade, and I'm blessed to be in that circumstance. I understand though that traders who want to get funded are looking to scale things up. And oftentimes swing traders feel completely alienated from, prop firm challenges. So consider checking out different ones that might fit your needs better. That's what I would say. First of all, you shouldn't feel the need to be super aggressive. In my personal opinion, you should trade prop challenges, essentially how you're going to trade anyways, but with slightly more aggressive when you are trying to get funded and way more conservative once you are funded, because most people can get funded. The bigger question is, can they keep the account past a month? Because most people unfortunately cannot. They go really aggressive and then they blow the thing right away once they actually get the funded account. what I would say is consider going more aggressive in your trial run. And I'm not saying gamble the whole thing. I'm not saying punt the whole thing, but use a bigger size and still risk manage all that stuff. Make sure you're following the rules of the specific fund you're looking to get funded with. Read those rules, read them 10 times before you touch any of that, because you can blow money without realizing it way too easy with some of them. Make sure you study the rules, be as aggressive as you can within the confines of their restrictions. And then once you get an account, trade it so conservatively. Trade it so conservatively, right? Bulent has another tip. I thought this was interesting. Never go aggressive until you are far from max drawdown. This is the most important part. Interesting tip there. Yeah, I have to come clean. You know, I haven't spent a ton of time getting funded, right? Because like I said, I fund myself in my circumstance. I'm very fortunate to be in that spot. I don't spend a lot of time passing, funding challenges just because I don't, I don't personally need that. But highly recommended that you really do your homework on these things before you touch them. They can be great for the right traders, but for a lot of traders, they are a trap because they're not ready for them and they think they are. Make sure you're very ready and really review rules detailed. Bob's been trading for, let me make sure. Okay, yep. Bob's been trading for less than 1 year. Primary goal right now is to find a profitable trading strategy. Also, before I answer this question, Trader Anthony says, I love Tesla and stocks. Trader Anthony and anyone else, make sure to check out the second YouTube channel I just kicked off about a month ago, Trader Nick Stocks on YouTube. Find me there if you like stocks. I'll be talking way more stocks over there. I do it a little bit on the stream. I'm a stock trader, true and true. I love stocks. But most of this channel is focused on indices, commodities, and Forex. But if you're a stock person, my people are over there. We're building a rival challenge. My goal is to someday have my own 2 channels fight each other. We're going to meet up. We're going to go to like a public library and have an all-out fight. I'm just kidding. But anyways, let's keep going. We got Bob here. Our primary goal is to find a profitable trading strategy. You seem to have a solid strategy and game plan that has been working for you. Who taught you, or did you learn, or where did you learn it from? And are you okay sharing your game plan for one to backtest and try it out? Absolutely. Yeah. So I have no secrets on my channel. I don't hide anything about what I do in the markets. When I was a new trader, I always thought profitable traders were just keeping some secret on YouTube, and they were being so selfish by not sharing what they were doing on YouTube. Like everybody, I was so skeptical of YouTubers because I was like, why are you making YouTube videos if you're so good at trading? And that was just my fundamental ignorance of how trading actually works. Great trading is making small amounts of money consistently over time. Even if you're an excellent trader, you're not going to get rich quick unless you have a bajillion dollars already, right? If you want to know how to get rich quick trading, start with $1 million plus. The rest of us, normal people, we start from the ground and we build it up. So I'm still building my trading career, right? That's why I share stuff. That's why I sell stuff, is because I offer tools that I use genuinely. I have no secrets of what I'm doing. I have no mystical, I know the markets. I invented the markets. None of that nonsense, right? I just trade and I scale things up over time. And my goal is to share the tools that are working for me with other people and sell them. And yes, that helps me to scale up my own personal trading capital, but it is genuinely what I use in the markets. And I've backed those things with my own live broker statement, logins on YouTube. You can go find them on my homepage. All right, let's keep moving on. If you want to back test what I do, so I don't have a 100% mechanical approach, but I have videos on my channel on my homepage. You can go watch my full strategy broken down piece by piece. It's on the front page of my YouTube channel. Go find it there. If you want to back test or explore my style, by all means, go for it. I encourage you to do so. And I also encourage you to be skeptical of everyone you come across on YouTube. Do they have trading stats published on YouTube? I'm not talking about, I passed a prop firm challenge. Anyone can do that. You can punt it and get lucky. Anyone can pass a challenge. Does somebody show you their live, real, regulated brokerage account over a long stretch of time to show you that they actually do what they say they do? That is a challenge that you should do with everybody you spend time watching. Otherwise, you could be wasting a ton of time and money. Next question is from Robbie. They've been trading 1 to 3 years. primary goal is to better understand the EdgeFinder. They do have the EdgeFinder already. Very cool. Hey, question about the EdgeFinder. Do you plan to add more commodities on the software? Say, for instance, cocoa. Maybe in the future. At this time, we don't currently have that, like soft commodities like wheat and lean hog and all that. I know that we do have some futures traders who love that stuff. We don't currently have it on the EdgeFinder, and I can't say that we have a short-term goal to get that added, but the EdgeFinder gets better every year, and so it is likely that over time we will probably dive into that stuff too. I can't say your name because I'm going to mess it up, but KG has been trading for 3+ years. Primary goal is to learn more about sentiment analysis. You sometimes talk politics, so I want to know where you stand politically. Yeah, I'm not going to answer that question. My goal with this channel is not to be a political channel whatsoever. However, politics do tend to impact the stock market and the Forex market. And so my goal, of course, my bias inevitably is going to leak out in places where I don't mean for it to. But my primary goal is nobody comes to my YouTube channel saying, and maybe you do, but the vast majority of people do not care for me to dive deep on my opinions on politics. Rather, people come to my channel and say, okay, Trump's administration is doing this. How could this potentially impact the markets positively or negatively? What about the dollar? What about gold? That's what I'm here to do. You've got a plethora of that sort of stuff all over social media. And if you want to brainwash yourself into hating the other side, then you go for it. But for me personally, I think there's good people on both sides. And my general view is that, my goal here on the channel is not to be a political commentator to best of my personal human ability, but rather to report what I think it could do to markets. How do you see gold for the next few years? This is Giancarlo. I apologize if I say your name incorrectly. They've been trading for 3+ years. Primary goal is to improve trading psychology. Do you own any A1 trading tools? They do. Very cool. How do you see gold for the next few months? And how do you work in your sociology? I think you mean psychology when you use your own strategy. Biggest thing I can ever say when it comes to trading psychology is that if you worry about trades, if you're feeling anxious about trades, reduce your position size and see what happens. If you make your trading size small enough, it doesn't really impact you because you're not feeling like, oh my gosh, I'm going to blow this month's rent if I'm trading stupidly, right? But if your size is small enough, trading psychology is quite easy actually. Try it. Go to the minimum lot size or minimum contract size, minimum whatever, and risk very small and see how that feels. It's very different. You can trade with a much more clear head. And that's why I typically prefer always to stay on the smallest size possible that I can with accordance to my trading account size. But also take breaks, don't force trades, all the things you know already that you should be doing, just do them and work. And you're going to make mistakes, but work towards making less mistakes each day. So, next up from hello to you as well. Hello. What's your primary goal right now? Become a funded trader. Do you ever fear your edge fading away, or is it sustainable long-term if it's based on basic price action concepts, support and resistance, break and retest, etc.? Yeah. So I would say my edge is in no way technical. I have no edge technical analysis, like maybe tiny, but really it's, to me, technical analysis and finding an edge in technical analysis is one of the hardest things you could possibly do, because everybody on planet Earth who trades is doing that. They're already studying candlesticks and, so to me, that's going to be a really crowded place to try and find an edge. So instead, understanding fundamental analysis and, major macro trends happening in the economies of the world and in secular views or secular kind of like movements like the AI revolution, things like that, finding trades and trends within that is going to be a lot easier for me to find an approach, right? So let's just refresh here a little bit, make sure, yep, that's all of our questions here lined up. Thank you guys for those questions. Those were great questions today. Let's see. What else is moving today on the stock side? Google's down 1%, Nvidia's down 0.5%, PayPal's flat, Intuitive Surgical, Uber, Tesla's bouncing a little bit. What would be absolutely awesome on my Tesla trade would be if I had just closed that $750 and Tesla jumped up to like 350, and I could sell those calls again and this time collect like $3K in premium. I'll feel like a hero if I just close those calls. I shorted calls and I just covered them. I think 2 days later, I shorted calls like right around here. And then just covered them this morning towards the lows of this move. So we'll see. We'll see. Do you plan to hold Tesla long-term, Nick, with Robotaxis, Optimus? Yeah, Anthony. So you're dragging me into the stock side of things. You can't be doing that. Not over here. We don't talk about this publicly. We don't talk about stocks publicly on this channel. I'm just kidding. But yes, I think to some capacity, I will always hold some Tesla, or at least be trading Tesla with a bullish perspective. I mean, I've traded Tesla in and out many times in the last few years. But Tesla, I think that the robotaxi, autonomous stuff, I love all of it, right? It to me is very, very bullish, and there's so much potential there that I have to have a piece of that action. The bigger question, Anthony, is how much do I want to allocate to that idea? Because let's face it, Tesla is a super high risk, high reward stock. If Tesla's game changing 5 years from now, it could be up 1,000% from where it is today. But if Tesla's getting beat the heck out of by Waymo and Uber and other AI companies, guess what? Tesla's going to be down 90% by then. So it's a high risk, high reward stock, and nobody knows the future. But I generally think that even though Elon Musk is a highly controversial figure, as a shareholder, I'll tell you why this stock's down today. It's because he's talking about starting some new political party. The reason the stock doesn't like that is because people were just getting excited that his attention was likely going to come back to Tesla. And now, with the concerns that he's not going to be there. So there's so much drama around the stock, right? There's so much drama around Elon Musk, the CEO, but the technologies, the innovation, I think is still there, and the story is still there. So I like the stock for that reason. I dislike the stock for the political risk that comes with it. So my middle ground has been, I do intend to sell calls on half of my Tesla position. So 2 contracts or 200 shares, I want to sell out of half of them. I don't want to sell them here. That's why I sold calls at 375, because my idea was if the stock ripped, I would get called away from half my position. And I'm going to continue to kind of sell out of the money calls on Tesla until I get called away for half my position. That is the plan. So yeah, we'll see. I think he's a brilliant CEO. I think he's, highly controversial politically, but from a CEO perspective, I prefer to not bet against him, rather, because he's been, a phenomenal CEO I bought Tesla for the first time in March of 2020. It was the best trade of my career. And I didn't know it was the best career. I liked the stock, and I thought sentiment got so ugly back then. People were like, EVs are going to, not going to be a thing, and nobody's going to buy an EV. And the stock proceeded to absolutely be the biggest performer in my account ever. It went up 1,000% at one point for me. And I've traded in and out, right? So I sold out of it around here, and then I bought back in, and I sold it, and I bought back in, I sold it, and I bought back in. So I've traded Tesla many different times. It's a highly volatile stock, and the options on it it's my favorite stock to trade options on. So we'll see. But longer term, I do like the story. I think there's just a lot of drama that comes with the stock, and that's why you get paid so much in terms of premium when you trade the stock on Options World, if you're selling calls, selling puts. Should have Chris Pulver join in just a second. I'm starting to lose my voice here. We had a busy first stream back. Bitcoin's down 0.9%, still hovering around all-time highs. Take a look at some sentiment here. Put to call ratio. Put to call ratio is still kind of in the middle here. Sentiment kind of evenly distributed on the put to call side. However, we got the first bullish sentiment week in a while. In a very long while, actually. We jumped up to 45% of respondents saying they're feeling bullish on the stock market. For a while, or for months now, it's been, the crowd very, very scared, very bearish on the stock market, right? We've seen that officially flip to the crowd now thinking that the stock market is bullish. That sentiment completely shifting. So to me, that this is sort of a yellow light. I'm not necessarily bearish on stocks. I'm just not adding a bunch of position size to indices or individual stocks at this time. I do think, I know this is hindsight, but if you were watching the channel, then you know what we were doing during that time. We were buying stocks. There's a lot of stuff I bought in March. I was a little early, but I was buying stuff. In April, I was buying stuff. In May, I was pretty much pumping the brakes on buying stuff. So I bought most of my stuff in March and April. I traded the indices long in May and June. So just one step at a time. But I do think that the market has now flipped, and now you're getting sentiment a little bit more on the other extreme, not extreme levels by any means. But again, I think this is a yellow light for me personally when it comes to indices. Not going to be bullish, not going to be bearish, or not overly bullish or overly bearish at this time. Looking for pullbacks, then I'd be more bullish. But right now, I think that my personal opinion on the indices is that I think that they're stretched. They've had a remarkable recovery, but I think this recovery is due to cool off. I mean, you've got stocks in here that are, look at Palantir, look at Robinhood, which is a stock I own, and I love this stock. These are great companies I really love, but the hype trade has exploded, right? You got like stocks like Roblox, another, believe it or not, yes, Roblox, you can trade that stock. Look at this thing. It's been a monster. So, Reddit is another one I think that's done really well. Actually, Reddit's not done as well as I thought it would, Reddit. But anyways, you've had a lot of hype in the trade. So for me, it's one to just kind of sit back and wait. Guys, up next, we're going to have Chris Pulver take over the show here. Reminder that the EdgeFinder sale is going on right now. Get 45% off by sending us a direct message on the website. And we'll extend that, by the way, to the Pulver Alert service as well. If you like Chris Pulver's commentary, you can actually get a huge discount on his signals as well. Send us a direct message for more details using the link that just got dropped in the chat. Stay tuned. Up next is Chris Pulver.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. Happy Monday. Hope you all had a great holiday weekend. Wanted to just kind of address a couple things, really clean technicals, and why I think we have to have something, at least in the form of a light pullback. A couple of reasons. I'm going to highlight this right here. I'm putting an arrow to my 50-period moving average right there. And also, let's count some waves. Since the bottom on April 7th and the rip that we saw on April 9th, if we go 1, 2, 3, 4, 5. I'm not saying this is a guaranteed fifth wave top, but I'm saying that as this push happened for these last 8, 9 candles, I think it would make some sense that we at least see an ABC correction or a 1, 2, 3 correction. So something like this. There's wave 1, 2, 3, 4, 5. A lot of times when we see correction, it is pulling back to at least test the bottom of wave 4 or the low of wave 4. So it'd be past resistance here Okay, I guess I'm not drawing that very well, but past resistance here or the bottom of wave 4. So an A, B, C correction. That's it. It doesn't have to be huge. It doesn't have to really do any crazy damage outside of just pulling back and checking this trend. And also that 50-day moving average, at the very least, we're a lot of points above it, which is also pretty unusual. So value-wise right here, we're sitting around 59.50 and we're at 62.50 plus. I mean, 300 points on the 50-day moving average. Honestly, if you go back to a lot of periods here, you rarely see 300-point moves unless we have a correction coming shortly after. So, for example, this move, we were straight up off the 50-day. That was around 274 points. Okay. The magic number today is 300. So how many times do we get 300 points above the 50-day moving average? You can see it doesn't happen very often. This candle here was around 270. Then it went sideways and found the 50-day. Over here, I would say that's a decent stretch, probably not 300 points, but let's go from this point here. Around 230 points. Decent stretch before we had a top around 230 points. So, I mean, again, you can go back as far as you want. You're not going to see a ton of overstretched moves above a 50-day moving average without having some type of pause or pullback. So that's my thought. Whether it happens or not, obviously nobody knows. We've got some drama. It's Musk versus Trump 2.0. Who knows? I just know Tesla's being punished pretty badly for, at least with a nasty gap lower. I've got covered calls. I've got collars. I'm just kind of waiting to see, does it get worse? Some of my protections out into August. Here's what intraday price action looks like. So we gapped lower, pretty calm price action so far. And I've got some potential floors today around 62, 35, 30, and 25. Potential ceilings 75, 80, and 85. And price for Monday's trading might be just exactly this, sideways. If it does roll over, the VIX is elevated a little bit. VIX is up to 17.63. If it does roll over, we're looking at like a 1.1% move. That'd be mostly to the downside. So that would be from the close on Thursday. Even though the market closed early, it was up quite a bit. We're up like 0.8, 0.9% on Thursday, even with that short holiday trading. But if we pushed lower for the day, potentially has the kind of 6,200 in the cards if we're going to fall and fill this holiday gap, possibly push a little bit lower. Okay, but so far price action seems to be pretty contained, just a little bit of a gap lower, but that's about it right now. I do have a pending order here at the tops, 6280 by 90, 85 by 05. So I'm kind of looking at defending these two levels here. 6280 and 85. I'll keep those right there. So if the ceiling remains in check, then hopefully I see some additional profit. Otherwise, if price breaks the lows, then I'm not going to get filled at the pending orders that I have, which is fine. Okay. All right, let's have a look. Does that make sense on the wave count and the 50-day moving average? And again, feel free. Like, you can go back to any SPX chart, look at the 50-day moving average, and see that we oftentimes don't have a big push 300 points above without having some type of pause or pullback. So again, this week, there's not a ton of news coming out this week. This is not the inflation week. This is kind of a nothing week. If we go to high impact for this week, take a look. So today, all low impact. Australia expecting to cut rates by 25 basis points. RBNZ holding rates the same. I wonder what that does to the Aussie New Zealand. FOMC minutes on Wednesday, 2 p.m. I mean, is this a nothing burger? Is this more just focus on July 30th? We have CAD employment on Friday. We had non-farm that they squeezed in on Thursday last week with the job numbers being okay. All right. So this week, FOMC minutes kind of the big one for the U.S. That's about it. We might have some, I don't know, some peripheral stuff happening like noise. Next week, though, inflation data hits. So we have CPI on Tuesday for the U.S., PPI on Wednesday for the U.S., retail sales for the U.S., unemployment claims for the U.S. all next week. And earnings season kicks off this week as well. So the 14th or the 18th, probably a bigger week as far as what's at stake, led by financials, getting into the Mag 7. They're usually the first like couple weeks of earnings season. So I'd say that inflation data plus your round of earnings really hit the headlines. Is it good or bad? What type of guidance do we have? I think the pivot's been hard, meaning the U.S. has pivoted hard towards growth. I think that bodes very well for stocks. It really do. Even if we are passing this tax bill, Trump obviously is pushing it through. Republicans have the power to do so. I know Musk has been vocal about it. It's not really going to matter. I don't think anybody wants to be kicked out of their seats in midterms, which is why they're all voting for it. There's a bunch of terrible stuff in it, just like there is in pretty much every 1,000-page bill that nobody reads. But that's not for us to figure out. I mean, what we have to figure out is, can we trade and make money? And to me, like I said, if I'm just looking at simple wave structure, wave 1, 2, 3, 4, 5, inside of this, I'm looking for at least an ABC correction. Whether that pulls back into like 6,000, that's a shallow pullback, but that still fills that gap here. This would be the ceasefire trade agreement gap if we fill that. If we pull back any deeper, then possibly coming back to this U.S. China trade agreement gap. But to me, I'd say the market is very well supported. There's a 21, a 50, a 100, a 144, and a 200. There's a lot of dynamic support in here. So, I mean, and this could be one of the more crazy volatile markets if the market came all the way back down below the 200, then had a dead cat bounce, and then fell all the way back down. I don't think that's going to happen. But, would I be surprised? Not really, given what 2025 has unfolded so far. I would say that even if we have a pullback in an ABC type correction, a 1, 2, 3 type correction, we're going to find some really good dynamic support between, I'd say, 5,900 and 5,700 right now, just because that's lots and lots of moving averages. Plus, we've got some gaps in support at previous lows, right? And if you look at this posturing, this high, if this is an impulsive move that needs to have a pullback, that's fine. And then we can base and build up for another all-time high. Okay, let's take a look at some other stuff. So there is our NASDAQ or our S&P. Let's take a look at NASDAQ here. NASDAQ comparable. Okay, similar structure. 1, 2, 3, 4, 5. So an ABC correction. Do we pull back to here, pull back to here, somewhere in this area, looking to go long NASDAQ, but I want to see a pullback first. Conservatively, let's say this is around the top. Doesn't have to be the top, but around the top. Are we able to pull back to maybe this level here? That's about a 5% pullback on the NASDAQ, maybe a 6% pullback on the NASDAQ. If it gets a little dicier, yeah, we could have a double-digit pullback on the NASDAQ. This could go 10 to about 12% and still have lots of good support, right? We could still be supported by the 50, the 100, the 144, the 200 moving average. So I'd say somewhere between about 6 and 12% if we have a pullback. Okay, I think the probability of pullback is high. And this is why I have cash on the sidelines. This is why I'm waiting. This is why I'm, being patient with some of my strategies and deployments, because I think at the very least we have to have something like just a reality check, just a pullback, something. Qs, obviously NDX correlated 1, 2, 3, 4, 5, something along these lines here. 1, 2, 3, 4, 5. Okay, do we pull back to this area? Do we pull back to this area? If it gets a little nastier, do we fill this U.S. trade agreement gap? Maybe. Okay, does it mean that I'm taking bearish trades right now? Not really. Daily income wise, yeah. Daily income wise, sure. Like this morning, I did bear call spreads on SPX and it worked out just fine. Okay, but overall, all I'm really waiting for is a dip or a pullback so I can position for slightly higher VIX, where we've gone up from lows around. I mean, it had a 16 VIX last week, and now it's up to 17 and change. So that little spike on the VIX is up around, 9%. Okay, so slightly elevated volatility. Do we get the VIX back into the 20s again? Does this roll over? Looking at some support levels in here, do we end up breaking that support? Do we end up breaking this, huge trend line at some point? I don't know. So I just think a pullback's needed, and hopefully we will get one here maybe in the next week or two. Okay. All right. Let's go dollar index. Russell and Dow as well. Dow just shy of the all-time highs. Again, even a pullback here. I think that would be great. If we get a pullback just shy of the all-time highs, where? 1, 2, 3, 4, 5. Do we get an ABC correction on the Dow somewhere in here? I'd say between like 430 and 415. So between 430 and 415, posturing for more ups. And I mean, I really like kind of the 1-1-1 strategy for that, where I can do a bear put spread. Actually, this wouldn't be awful. Let me see if I can look at this right now. This is going to be interesting. I'm going to see if I can get a bear put spread on the Dow if the premium is good enough. I don't think it's going to be because the IV rank is pretty low, but let's find out. If I went out on the Dow, probably have to go out like August, September, 46 days. That's going to be tough, but it's all about the premium. That 458, that's way too high. Why is it strike price so bad? That's a terrible strike. There we go. Okay, so I can get $1 something for that. What's my lows? 370. So I'm gonna go quite a ways down. I'm gonna go to like 380, maybe 390. 390 is not great, but I'm gonna go out further. It's only 39 days out. Let me go to maybe the September 19th one. Now I should be able to get something for a naked put. If I was gonna say I'm gonna own the Dow at like 370, I get $1 for that one. But I want to put in a bear put spread. So like that, it's a $5 Y to get. Where did it have to be? So 375, 80, 85. Really? That's terrible. Okay, I was hoping I could put a bear trap in near current highs and then put in a naked put that gets me paid. Instead, I probably do something more creative like, hey, I'm going to own it at 370 or 375 and put in a 1-1-1 like this. Like I can pull in some income here out to September. The Dow would have to be all the way down to 375. The issue with the trade like this is the naked put is facing a lot of drawdown potential, because even if we had a pullback from 446 down to 425, that's a $2,000 pullback on 100 shares, right? So if I did that on 15 accounts, I'm going to be in a big fat drawdown, even though the price is still safe. It's just a drawdown that I don't really want to necessarily work through. So I probably would just wait for like a dip, a pullback, then put on trades like this and try to catch more of the recent low. If you want gold, yep, I'll get to gold in just a second. I will get to gold in just a second. All right. So Dow, I like. I just don't get the premiums that I want. Russell, also would love to see a pullback in this one. I did some rolls last week. I've still got a 201. I mean, I own the shares at like 190. I'm getting them covered at 201. I'm just going to keep adding more covered calls by rolling. A pullback is fine. This one has performed way. I mean, it's up, but off of the lows. I mean, it's up 30%, which seems like wow, that outperformed, but it's still not at all-time highs. So this the big question is like, well, if the Fed starts cutting rates, is this going to allow the Russell to catch up? Is small caps going to outperform? To be determined. I think there's so many companies within the Russell 2000 that still don't make money, that still aren't profitable. That it is. I mean, it's a good index. It's just not my favorite. I think if you want to trade the positive drift, I think you're better off trading the S&P and the Nasdaq. But understanding some basic option strategies to help at least protect your position and generate income on those like higher premium positive drift indexes like the Qs and the S&P. The Dow's done a good job catching up these last couple of weeks, but like I said, I'd like to see a pullback and then maybe position for the Dow. Russell, anything in the 210, 205, 200 zone, I'm still just going to keep selling covered calls. All right, things get really nasty. I'm still pretty well hedged out to December in case the market just decides to do something that nobody sees coming, which is like black swan, right? Which we don't know. I still think the U.S. is focused on growth. We're going to obviously add, $3 to $4 trillion to the deficit over the next 10 years. This is a hard pivot. This is the K-shaped recovery that we had since COVID has now become an E, something like this, right? So instead of the K-shaped, which is if you have assets or you don't, you can feel it. If you have assets, you're doing very well post-COVID. If you don't have, so this is the have not. Okay. That's what COVID was. Those that have more. Those that have less. And life is more expensive. So the whole idea for the Trump administration is to pivot and benefit both, which is shifting the have-nots into having something better, maybe some improvements. I still don't think this tax bill is anything for everybody. I think it's still very much catered towards the top. There's all sorts of weird energy credits that are going away. This is terrible for new energy. This is great for old school energy. So I don't know if this is a good play in XLE or if this is a good play for like Chevron, Exxon, some old school like legacy energy companies. But I don't know. This whole thing could be like this AI bottleneck. Again, most importantly, it's probably going to be earnings season, which is a couple weeks away. We get into earnings season next week. We get into inflation data next week. This week is more, does the market stay where it is at these highs? Does it roll over on itself? We'll find out this week. I think this is a pretty key, pivotal week to see where prices go. What type of guidance do we get? What does July 9th mean? Does it mean anything? 90-day pause, does it mean anything? Do we have to come out and have a public announcement of how many companies lined up to do deals with us? To my knowledge, we have UK, a pause in China. I don't know what kind of deal we have in China, but we have UK, China, and Vietnam in good faith, right? In good credit. I think if Eurozone wants to play strong and Japan wants to play strong, they don't just roll over. You've got strong economies that are looking for trade deals outside the U.S. And if the market catches wind of that, they could also be another potential headwind. Okay. So anyway, just lots of stuff to unpack. That's all. Tesla, I'll get to Tesla. Just give me a second here. How much is a terrible price strike? What does that mean, Lee? Terrible price strike? Oh, it was. I just didn't have to put low enough. The put side didn't go low enough for me. I wanted to see the Dow down to 370. I think that's what the comment was. Okay, so that's Dow. That's Russell. Let's go to gold. Let's go to dollar index. Let's go dollar index here. So as I've talked about for the last several weeks now, don't sell the dollar into these lows. We're hitting symmetry. I think the dollar catches a bit of a bid. If the market has a pullback based on the wave count that I'm seeing, even a simple ABC correction, the dollar maybe catches a little bid, maybe sees an ABC type move as well. Maybe we get back to 100, 101, 102. I still think the dollar is heading into more of a bearish territory. I just wouldn't want to be shorting the dollar at these lows. If you're shorting the dollar at these lows, then you also want to be adding and adding and adding and adding. You're like a perma bear on the dollar. That's a tough trade if you ask me. I would rather be out of my dollar shorts, maybe the courage to buy low. Okay, maybe the courage to buy low to see if this gets a bid to the upside. That'd be a pretty tight stop compared to a decent upside reward opportunity. I just don't know if the bottom is in. So that's why I'm just waiting for a trend line to break or just be patient. But I think if the dollar pulls back to 100 or 101 or 102, I think that's a good spot to look to fade the dollar. I think that's fair. Again, not just fading the top automatically, but rather waiting for a trend line break, look for confirmation, position accordingly, maybe take a couple of stabs at some confirmation with trend line breaks and some price patterns. So I think the dollar catches a bit of a bid there. Oil catching a nice little bid off of 65. I think this whole conflict in the Middle East is not fully de-escalated. I think there was, yes, a ceasefire. The market's melted up higher. But if we catch bid here at 65, this is just returning back to the range we've seen for months. All this was noise, right? Noise. But if we go back into a multi-month range again, basically it's 65 to 80, right? We've made slightly lower highs, but we've made we've made equal lows outside of the little. I don't even know why this dropped, honestly. Was when was this? Was this Liberation Day? Was this not? I don't even remember why this dropped. Yeah, it's Liberation Day. So there's your Liberation Day. So that's what broke the market, and then oil pivoted hard again. I should have held that stupid position long. I'm still in a 1111 on crude oil. That's a CL trade out to, I believe, December. Looking to see if oil stays above $50. If we still have moderate tensions in the Middle East, then we're probably going to stay bid at 65, 60 bucks, pretty well supported. 55, pretty good floor. Inflation obviously is very like tricky. If we're seeing oil prices back into the high 70s or 80s again, that's going to put some more like inflation, some real inflation back in the markets. Natural gas, let's go UNG. Making some fresh lows. I'd like to see natural gas catch a bid. I'm still selling some diagonal spreads here, trying to get out of the trade for profit. I think the trade is fine. I'm frustrated to see that such a good looking bull market for a second, all of a sudden turned right back into garbage. So either this is the low, the impulse, this is more of a corrective phase, and we're just trying to get through a correction here for UNG to go higher. I hope that's the case. But if I'm wrong, I'm still going to be using my diagonal spread, which is I'm trying to think what my debit is. It's pretty low. UNG is a 5x17, so I've got 12. I think my debit's like $8 in total, and I've got a $12 potential profit. So I'm still up some profit. I'm still trying to sell. This only out to July 11th, which is this Friday. So I'll just keep selling, and lower my cost basis. Let me see what my cost basis is right now. Let's go to UNG. My cost basis is $9.05. So my break even is $14.05. And I'm trying to get it called away at 17. So I'll keep selling against it. Maybe another 30, 40, 50 cents. This call still made me $1.56. So, I mean, I'm getting good premium for it. It's just how far do I have to go out? How much, like, do I want to lower my strikes? Not necessarily, but I will if natural gas doesn't look any more promising to the upside. Gold. Gold, I still think we have a pullback. At the very least, consolidation, right? I've talked about this for a while. I mean, I've not been a bull on gold. I've been wait for a pullback, right? I mean, since this whole thing has been running, I'm long gold. I love gold, okay? But I'm not buying at these highs. I am going to be patient. If we pull back to equal lows, I like gold at 3150. If we pull back to a nice round number like 3000, I love gold at 3000. Okay, to me, this is a nice bull pattern, and this is consolidation, and that consolidation hopefully has more upside. Now, it could get a little bit nastier. It could shake out a bunch of traders because obviously it's easy to see like, well, if I just bought gold here and it goes up, that's great. Well, that's what easy trade is. So do we have a shakeout? Do we have, gold here, consolidation, then a fake out, then comes back down and then test the levels like my 144 200 moving average, then rips higher? I don't know. All sorts of stuff can happen. My point is, I would be way more satisfied as a gold buyer if we at least found my moving averages. Find my 144, find my 200. I'd be a lot happier. Okay. Silver. Silver actually retesting recent highs. I still think silver is a better trade technically than gold. We will see what happens to this area. If there is a bit of a backfill, then this is going to be like a slow trend on silver. But if this is nothing more than a bull flag, if this is a bull flag on silver and we break these highs with some conviction, I think silver is heading up into $40+. So keep a close eye on gold. Or I'm sorry, keep an eye on silver, because if we break above 37 and change, 40 is a nice round number, and 48 to 49 to 50 are all-time highs. I love that trade. Like that's a metal that offers 35 to 40+%. I think that's good allocation. I think gold still performs well, even in the outperformance of silver. If silver does very well compared to gold, they're still both good trades. So I just don't think you can do a lot wrong if you're in gold and silver, at least as some type of diversifier. The technicals on silver look so good. So I like it. It's one of my bigger metals positions, kind of, diversified trades. Bitcoin, 108. Some risk off trading may sour the mood of Bitcoin a little bit. I just don't know how much lower we're going to go. To what degree do we pull back to 95? Do we pull back to 90? There's a nice little structure area back here. I don't think we're coming back to 75 without some major risk off trading. If we do pass this bill and all of a sudden prices are heading higher, everyone was screaming this weekend that because Musk is trying to throw his hat in the ring for some type of third political party, that it's going to be good for Bitcoin because it's going to be something that's, debt focused and austerity focused, and getting candidates to run on a platform that's different than a two-party system that doesn't do anything different. Historically, I don't know if you know this, everyone swears that Republicans are way more conservative. No, they're not. they both spend equal amounts of money. In fact, over a 10-year run, like 8 to 10 years out, Republicans are worse in the deficits that they've caused the country. So anyway, I mean, Trump ran on an austerity-based platform that had support, and he pivoted hard. And here we are with a $2.4 to $3 trillion bill that is just kind of getting crammed in to pass, plus a trade war, plus tariffs around the world. Like, again, all this stuff you'd think, like this wall of worry that the market has climbed. Where's the reality? I mean, a reality check would be a nice correction. Do we get one? I hope so, because I want to position for upside, but just give us a pullback, Anyway, Bitcoin, I think Bitcoin has done a pretty good job of cementing itself as at least an alternative. Whether you like it or not, some people swear, like I know traders that have been in the markets for 20 plus years and they still don't have any Bitcoin. And that's fine. It just doesn't really make a lot of sense to me when it's just a trade. As a trade, you cannot deny how good some of these investments have been in just buying Bitcoin. So my take is, if we break these highs at 112 and change, I think there's no reason that we can't get to 125 or 130. That's just a measure move. Okay. The question there is how bullish, how bubbly, how kind of overbought does it get before we start to see more of a correction? I mean, honestly, if I put this trend line, make it a four width, if we stay postured above this trend line here, I mean, we could be in a pretty nice bull market for a while. Even if we have ups and downs, it could still be a very healthy bull market. But obviously people are accustomed to like these crazy runs and these rocket ships to the upside and then a 20, 30, 40, 50% crash. I don't know about you, but those are exhausting. Like at some point, it's like the most important thing with a momentum-based move like that is you got to know how to take profit. And that's hard because when you start to get like super vertical, let's say Bitcoin like runs to 130, 140, 150. Well, at this point, it's like if we start to go vertical on Bitcoin, as fun as it is to have the gains on that trade, at some point you got to take some profit. You got to move some trail. You got to trail some stops, because at some point that will end up crashing hard, because what goes straight up oftentimes does in fact come straight down. So I think that all the momentum stocks that Nick was just talking about, Robinhood is one, Palantir's been up there, Carvana's been up there. I mean, there's been all sorts of stocks that have been ripped. Like, I mean, hell, Nvidia has done it this year. You got to know how to put some trailing stop losses in to protect some profits, because at some point a move that's gone straight up 100+% is likely going to pull back. AVGO from the April bottoms going up 100+%, it's going to pull back. Microsoft from the April lows, it's going to pull back, right? And in the law of big numbers here, when you have something that runs 100+%, it's harder to go that next 100%, as opposed to something that's gone up, 10, 20% off the lows. There's at least some room. So anyway, I'm not saying I'm switching to value. It's like clearly some stocks are just down for a reason, and I think there's a lot of things that are considered dead capital for 2025. But I don't know. I'm just doing some boring stuff to make money at this point. Protect my downside. Do boring stuff to make money. Wait for an opportunity that I hope I get. Dip on gold, dip on spot, on Qs, pullbacks in the indexes, position accordingly. It's like, I don't know. Maybe I'm being too patient, but I just can't justify deploying, such a intentional cash position. I can't deploy it at all-time highs. It makes me sick. So I'm not going to. I'll wait, and maybe I wait longer, but it's okay. Anyway, MicroStrategy up at 400. IBIT just off recent highs. We got highs here around 60, almost $64. Coinbase, since we announced a stable coin, again, huge shot. Overbought conditions with some divergence. Okay. I mean, again, I think this is going to get checked. We probably pull back some inefficiencies here. Ethereum, I know Tom Lee had a big announcement over this last week or two. He's essentially trying to be like the MicroStrategy / Michael Saylor of Ethereum. I don't know if that's good or bad. Does that backfire? It's probably all about network effect. Maybe it does take place. I just don't know if it's going to be position now and hope, position now and position small. Because if you position now, does it come back down to revisit lows? I still think the Ethereum network-wise is a good trade, but you got to look at it like a trade. I think Bitcoin to me is a little bit easier to rationalize, just like rationalize investing in. But I think Ethereum, it just why is crypto as a whole, like meme coins / fart coins, like all those coins, meme coins, why are they not performing the same? So you have like a bit of a kind of bear market look in some of the crypto space, but Bitcoin is still near all-time highs. Ethereum looks good. I mean, this move on the right side of the trend line does look like a pretty good reversal pattern. So I like that swing to the upside. But if I were to invest now, that'd be area 1. I'd have to be willing to also say, okay, area 2. I can't deny that we can't have some type of fake out here and pull back to lows before we end up getting the move back up. And that's a big if. So I think if you treat it like a trade, it's a good trade. If you treat it like a long-term hodl, I think it's risk, like everything else. Okay, copper probably gets checked. We've checked here pretty hard the last couple of days. Anything in Japanese yen is down slightly. The Nikkei, this is Japanese yen, EWJ just off of highs. I'm setting another chart. I'm here. I'm holding shares of this EWJ, so that'd be fresh highs. The DAX, tiny little 23% pullback, trying to head back up to highs. FTSE, same thing, hasn't had a pullback yet. It's heading back to highs. China down slightly. Brazil, nice rip on Brazil. I hold shares of EWZ and ILF. That's British or Brazil and Latin America. Those are looking pretty good. Mags down a little bit. Apple down a little bit after a nice little run last week. Amazon up to some fresh intermediate highs. Broadcom, this is one of those trades I thought should be checked. I did a bear call spread here on AVGO. It's 250 wide. This is the most I can lose, but I'm hoping to at least have some overbought conditions with a reason for the market to pull back a little bit. Google, fine, holding above those 140 levels. Meta, I'd love to see a pullback here, reasonable pullback after all-time highs getting hit. Microsoft, again, overbought conditions with divergence at all-time highs. I think Microsoft is well cushioned if we have a pullback into these areas. Offer a dip buy an opportunity on Microsoft. Earnings are probably going to be fine. I still have dollar cost allocations. If we get a decent pullback on Microsoft, and again, this could be a very sensitive earnings quarter. If Mag 7 and the broader market doesn't deliver on stellar earnings, like maybe the market prices in, a bit of an earnings compression, maybe. We'll find out in the next couple of weeks once we start to see the financials kick in. One thing you could look at for financials, XLF, which is just above these recent all-time highs. If XLF is going up, okay, it's probably setting the tone for a strong earnings season. If XLF is going down, it's probably setting some caution ahead on earnings season. Okay, we usually see earnings seasons kick off with financials, and I think they're going to set the tone. We'll kind of see where the pulse of the market is too. If financials are up and the market is ripping like bank stocks higher, then I think anything that pops up good is probably going to be pretty solid and bullish. Let's see. One spread can destroy all other winnings. Give me an example. I mean, that's a pretty terrible spread if you're letting one spread can control your reward that much. So what's the trade? Okay. Dollar Swiss bought at 787, holding 85. Good. I like it. I mean, it's like there's always reward. There's always trade-off and options, right? A high reward to risk is low probability. A high risk reward is typically high probability. There's a fine line. I mean, my rule of thumb is if I have a wider spread, it's a low reward, but higher risk trade, but a high probability trade. As long as I'm pulling like a third of that width, then I usually don't worry about it. What I don't want to do is like, oh, I've got a 99% chance of making money on this trade, and it's I'm risking $2,000 to make $100. That's not a good trade. But if I'm risking $2,000 and I can make $250 to $300, it's like, okay, it's still backwards, but it's like 1/3 of the width. So if I'm 10 wide, I'm trying to get in $3. If I'm 20 wide, I'm trying to get in $7 or so, about a third of the width. That's my rule of thumb. Okay, you want to go closer at the money or in the money, that you could play around with getting 50% fills or 60, maybe 60, 65% fills sometimes. But it's just a trade-off. Just play with the strikes and play with the numbers. All right. Anyway, earnings season. I've got to go here in just a couple minutes. Earnings season. Watch XLF. Okay, you can watch JP Morgan. You can watch some other financials when they're coming out. They kick off like basically this week, next week. You're going to start to see these financials dripped in. I think XLF is a good barometer to see where earnings season is going. Are we leading off strong with positive guidance out of financials? Maybe. Is the market going to, look to jump into anything that looks positive? Maybe it's more Mag 7. Maybe it's everything that's value. We could also see that there's a rotation going on this summer too. Maybe it's better to go into stuff that's dirt cheap. Maybe it's better to go into things that are performing worse than Mag 7. I mean, like last week, I mean, Pfizer had a nice pop, right? Pfizer from these lows is up like 30%. Pfizer is up around 22% off those lows. Okay. I mean, does that mean it's like the best stock ever? No, it just means like it's getting some love. Snapchat off these recent lows. Snapchat's up 35% off the lows. I mean, even if something mildly goes right on Snapchat, that's better than sitting here at like AVGO up 95%. That AVGO has to go up another 20, 30, 40, 50%. Look, this is easy. If this just goes back up and doesn't suck, then we could have Snapchat rip up like 75%. So this might be where earnings season takes us, which is things that are underperforming or have not recovered as aggressively through April, maybe have a bit of a bid. If the market's going to stay somewhat healthy, maybe it's a broadening out, as opposed to just pumping money into AI, pumping money into Mag 7, pumping money into tech. We'll see, because a lot of those runs since April have been pretty aggressive. So I still go back to, I've got like literally 2 minutes. I got to go. I think that the trade with like the 5-wave count, I wouldn't be surprised to have some type of pullback. I just don't know if it's going to be, this week with light news, FOMC minutes. That's it. Next week we have CPI in round one of earnings season, and keep an eye on XLF. Okay, so I'm looking for some type of pullback. It could be very minor, 3 to 5%. It's totally fine. I don't think it's going to scare anybody. We get 7, 8, 10% like we saw last summer. That makes the market maybe flinch a tiny bit, but not enough to really derail. I don't think we're going to derail anything. Okay. So anyway, time will tell. But all right, I'll let you go. Come back and do this again tomorrow. Make sure you get your discount. Get your discount on the EdgeFinder. Save that 45%, and get some Pulver alerts while you're at it. And let's come back and do this again tomorrow. All right. Thanks, everybody. See you then. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.